Hi everyone, welcome to another edition of K-Pack Lending. I'm Kristen Packard with American Pacific Mortgage. This is my guest and local expert with Keller Williams Success Realty, Kristie Nelson. And today we're going to touch base and talk a little bit about the millennial buyer as a first-time home buyer and the trend that we're seeing right now with the millennials.
Yeah, so Kristen, that is one thing that we're really noticing in our marketplace is one of our larger populations, the millennials, are transitioning from renting to buying now. So could you give us some ideas and some tips for our millennials and our first-time home buyers of what they should be prepared for as they are looking to buy a home?
Yeah, if your goal is to buy a home, there are a few things that you'll want to definitely be mindful of. The first thing is that you need a 24-month history of work or an employment. A lot of people don't realize that you can have a gap in there and still qualify, but you do need to have a consecutive or consistent 2 years of work history documented on the loan application.
So can I ask you a question about that? Because I do have a client who they switched jobs, but it is a similar line of work, but they're not working for the same employer. So would that work history still count for them if they had? Okay.
Yeah, and it doesn't have to necessarily be in the same line of work.
Okay.
If they're a W-2 employee and they're just, an hourly or salary employee. If they're self-employed or 1099 employee, it gets a little more complicated, and then there are some other guidelines. But the majority of people would have the 24-month history, as a W-2 salary employee.
Okay.
So. And then, another thing to be mindful of is, your credit score, and do you monitor your credit? It's your interest rate and many things in the loan buying process are so dependent on credit now. We do pull a tri-merge credit report, which means we pull all 3 credit bureaus, and then the credit score that you would use for mortgage qualifying would be the middle score of the 3. So you get 3 credit scores, and then for qualifying purposes, we'd use your middle score. So you want to monitor your credit and start really looking at, what are you doing with your credit? Are you building credit? What's your credit score look like? Do you have a credit card that reports that back to you, or maybe your bank? There's different ways to get at least a median FICO score for you to start monitoring from.
Okay.
Yeah. And then another thing that you'd want to be mindful of is, do you have a down payment? Or are you going to want to do 100% financing, like first time 100% homebuyer financing? Because that is available today in the marketplace. Or you can always get a gift from a family member, or most cases they have to be an immediate family member, but you can always get a gift of a down payment, and in some cases it can also be a gift from an employer. Also, something to be mindful of for someone who's never bought a home is that it's a process, and it's a very specific process, and it takes time. And so you kind of have to commit to yourself that you're going to enjoy the process, and know that you're going to be going through the loan qualification process and underwriting and processing, for at least 20 to 30 days. Yeah. And then also, there are upfront costs. And so, and some of those spill over to the real estate side. So on your side, like what upfront costs do you normally see?
Yeah, so for any buyer, whether it's a first-time home buyer, millennial, or anyone in general, we have the earnest money deposit. So the earnest money is what you would put in good faith, saying that I'm willing to put, this amount of money towards the home that I want to purchase, letting the seller know that that's in good faith. Usually we see that anywhere from $500 to $5,000. For a first-time home buyer or someone in a millennial age range, you probably $500 to $1,000 is what you would typically see, but it could go up as high as $5,000, $10,000. It's in good faith saying you want to spend that money. You're willing to lose that money if something fell through, type of a thing, and that's your agent's job to make sure you don't lose that money.
Right.
The appraisal, as you know, can be an upfront fee. I do know you guys don't charge that you put that in the loan costs.
Right. Yeah. So we cover that up front for the buyer at our company. but and anyone getting a loan would want to check with their lender if that's going to be upfront cost or not.
Yeah. So if it is not an upfront cost, that is another thing that we let our buyers know that, you know, anywhere from $500 to $600 could be coming out of their pocket up front to have that money available. Home inspections are another thing. That is something that's completely optional. It's not required, as you know, for the loan. But we highly recommend any buyer get a home inspection on a property they're going to be purchasing, and that can range anywhere from $250 to $350 on up, depending on the size of the home.
Right.
So again, another out-of-pocket cost you would want to have up front because that is due at time of the inspection. Right. And then there's additional tests that buyers can opt to have as well. Again, this is optional, but buyers can opt to have a radon test or a meth test or a mold or any other testing, and usually all of those are charged $100 on a minimum per test. So I would say for a buyer, anywhere, you know, on a low end of $1,000 onwards, you know, to $2,000 or more of what you'd want in your pocket for upfront costs. Then you also have to factor in your moving expenses. If you don't have friends and family with trailers,
right.
You'd want to factor in your moving expenses as well as any fees to transfer the utilities to your name. Sometimes utility companies will charge a transfer fee that they pass on to the buyers. So just things that you want to be mindful of.
Yeah, on those upfront costs, absolutely.
So
So, and speaking of first-time home buyers, like a lot of people don't really understand exactly what that definition is in the mortgage industry. So you can you actually can have purchased a home previously and still be a first-time home buyer as long as you haven't owned a home in the last 3 years. And so that's sort of a misconception. People think, well, I won't qualify because I've owned a home before, but you can qualify for a first-time home buyer program as long as you haven't owned a home in the last 3 years.
yeah, exactly. And that's something people ask all the time, and so that's good to know because people don't understand they have that.
Yeah, they have that option. They can use that more than once. Right, absolutely. And also, you know, just as a rule of thumb, we're seeing, you know, millennial buyers be, you know, more savvy. And tell me some of the things that you usually see when you're working with a millennial buyer that might be a little bit different, you know, than someone else.
So the things I've noticed in working with a millennial, obviously they do their research and their homework. They, you know, they don't know a lot about the buying process, but they've done enough research to know that there is a process to it. Some of the misconception is, though, is they think that they can just walk in and be approved for the loan and then close the next day, and it's not instant. It's not the instant gratification that we're sometimes hoping for. That it is a process. It, you know, typically you're going to see 30 to 40 days from start to finish, as far as, you know, going in, getting your paperwork to the lender, and those are things that you would tell them as well. But we always let them know this is part of the process. You know, I mean, I know we've closed loans in 18 days. That's again, though, with them being ahead of the schedule and meeting with you prior to them looking at homes.
Right. Yep.
Yeah.
Absolutely.
A lot of them also, even though they're very educated, they still want to know if it's better to own versus rent. They're kind of on that fence of, well, I don't know, it still seems like it's a better option for me to rent versus buy right now. And so they really want to know, you know, I know interest rates are going up. We kind of talked about that in our last segment, but they want to know if it really is a good time for them to buy. And so educating them on purchasing now versus even 6 months from now, their buying power. That is a question they're asking a lot. You know, and then some of them are, you know, wanting to find properties with instant equity. And really to do that, you need to have a seasoned agent that knows what to look for with that.
Absolutely.
With the market we're in right now. But, you know, any home that has an unfinished area that you can finish doing a little sweat equity is going to help give you a little bit more instant equity. So
We've had several appraisals come back a little bit high recently. You know, so, I mean, it can happen.
Yeah, it can in today's market. Yeah, we've had a few. I've had a few myself this year with my clients who, we've got them in great positions to where they actually have instant equity from the shoot. So it's just knowing what to look for. And
wonderful.
Yeah.
Also, I think in saying that they are a little bit more savvy is they can navigate through the internet so well, and they're versed on being able to shop for their rate, and you know, they do have a knowledge of what that means, and that means they want like you said, the return for their investment. They want to get the best interest rate possible. One thing to be mindful of in that case is just that, you can definitely shop your rate, and I would encourage you to do that. But at the same time, remember that rates have been climbing steadily, and if you shop for too long, you could possibly shop yourself out of the best rate.
Yeah, yep, I've seen that. I've seen people interested in purchasing a home, and then they kind of pump the brakes for a minute because they're looking at their options, and then they miss out on a really good rate or a program that may have expired at the end of that month, or something that affected their
Yeah, it could have been the best possible thing for them. Yeah, absolutely, I understand that. Well, thank you for joining us today on another edition of K-Pack Lending. And, if you guys have questions, reach out to us or put some comments down. And we'd love to hear what you want to know as far as the real estate industry, the mortgage industry, as far as that goes for you. So thanks for joining us.